Welcome, traders, to another episode on Privacy Trades. Have you ever wondered how to intraday scalp successfully? Well, in this video, I'm going to show you exactly how to do a intraday scalp trading model strategy. So, I'm going to share a couple of principles and guidelines that I highly recommend. Once again, this is just for educational purposes. So, first things first, when you're scalping, I highly recommend focusing on one currency pair, whether it's a major, GBP USD, Euro USD tends to be good. It could be a cross pair. GBP JPY tends to be a good pair to scalp. Uh, Basically, you want to focus on pairs with low spreads and high volume depending on the trading session as well. So for this example, and from a past trade, two trades that were executed earlier today, I chose gold, which is known as XAU USD. And the reason why I chose it was because it's a high volume currency pair when that London overlap New York session open. So there's the one currency pair that I'm looking at. Second, to the model. Scalping, this is a very aggressive trading methodology. You need to be focused, you need to be precise, you need to be exact entries, exact exits, because things can change within a heartbeat. Okay, so second, you want to be in the 1 minute time frame. All right, so we got that set up there. So we have when we're trading, New York session open, London overlap, what time frame we're trading. We're trading on the 1 minute time frame, and we're focusing on one pair that correlates with those time zones for high volatility. So I'm going to delete the markup. As you can tell, I had two successful trades this morning, a 1 to 3 and a 1 to 4. And before diving into it again, I want to remind everyone to use proper risk management. I know with these smaller trades, with smaller pips, people want to tend to use larger lot sizes. But if you use a tighter stop loss, you can use a larger lot size while still using proper risk management. So let me delete the markup and show you exactly what I saw step by step on how to get into these scalping opportunities. So let me delete these items here. So first things first, we're gonna look for confluences, and I'm gonna look for first things first. I'm looking for a trend line. Okay, drawing the trend, and I'm going to draw the trend line from basically somewhere around here. And why am I entering in this region here? Because I'm trying to touch as many wicks as possible without compromising the body of the candles. So we have this tip of the wick, we have a wick here, a wick there, a wick there. Price comes up, breaks out of it, quickly slips back within it, respects it again, and then we have a first form of a breakout. So there is my multiple confirmations for a valid trend line. All right, second, I'm looking for market structure. You can tell looking historically, we had a market structure shift. We had price printing higher highs and higher lows. And you can see that there was a market structure shift. As this was the last higher high, we made a higher low, failed to make a higher high, made a now lower low, made an equal high, and then this was the beginning to the lower lows and lower highs, which is that beginning of that market structure shift to the downside. So there's that shift. So now I understand where I am in the market, is respecting this trend line. Okay. Now I do see price come out and break through this trend line. There's another market structure shift from the downside now to the upside in this region. Price, this was a lower high, failed to make a lower low, made a now new high, makes a higher low. So we're now using this trend line as a form of confluence, as a counter trend line. So now it's respecting it. So acting as resistance, now acting as support. All right, so we have two confirmations, trend line, market structure. So then we're gonna bring out our fibs from this swing low on the 1 minute chart. And live, this is going relatively quickly, so you got to be very sharp, very quick. We see price is at that 61.8. What's the 61.8? That's that golden zone. So I have three confirmations already And then fourth, I'm looking at candlestick analysis. I'm looking at what are the candles telling me. Candles tell a story. You can read them and they will tell you exactly what price is going to do. So you can see here, we have this indecision candle here. There's exhaustion. You can call it a dragonfly or a very small version of a doji. So for me, price comes down, taps, respects this trend line, counter trend line, and then we have a form of a bullish type candle. So you could have either entered here aggressively or entered there. So we have multiple confluences. So we get into the trade, we enter here, and our stop loss is going to be somewhere along the lines of outside the most recent nearest respected Fibonacci rejected zone. Okay, so we have price stopping around here, and then we have take profit 1 at the minus 27, and we have take profit 2 at the minus 61.8. So we have a setup right here, and earlier this was a 1 to 3. There might have been a little bit of a larger stop loss, but for the sake of the video, you could have made it tighter. And we can see price was basically straight into profit, and this trade lasted maybe about 1, 2, 3, 4, 5, 6, maybe about 15 minutes or so. So from basically 8:50 to 9:05, 9:07, 17 minutes in and out. And we were able to capitalize on a significant amount of pips. And this is still a 1 to 3, 1 to 3.5, depending on who you are and where you entered. But for me, it was a 1 to 3 earlier in the New York session. So there's one opportunity there. And then we waited and we were sitting on our hands looking for another opportunity. And we slowly saw another opportunity at about 10 o'clock. And we actually had a trend line drawn here. And again, same story. We use this trend line as a counter trend line. We had market structure. Previously, we were printing higher highs and higher lows. We smashed this original take profit. Price then shifted below here, and market structure shift. And then we see price then respects this, right? Price fails to make a lower low. We saw a counter trend line. We see a variation of a market structure shift here. So basically the market structure shift is this is the last lower low, lower high. Now price fails to make that lower low, makes that new high, and now there's our shift. So there's another confirmation there, and then we pull out our fibs. We want to pull out our fibs, and we want to be at regions relatively as close as we can to that 61.8. We tap the 50%, and then we have candlestick analysis. We have a doji indecision candle exhaustion. We would have entered based on that candlestick analysis, reading the candles, letting them tell us the story. This is not an assumption. This is based off solely technical analysis and reading the charts. So then from here, we could have took this all the way up to here. And stop loss would have been tap the 50, could have been outside the 61.8. And I actually put it somewhere along here. It was like a 1 to 4, I believe. And this could have easily targeted the first take profit 1 for a 1 to 2.5. And I ended up targeting that full take profit 2 for that 1 to 4. So there is the strategy in under 10 minutes. If you're liking these videos and they're helping out your trading journey, press that like button and subscribe.